you will see a baseline kind of formed by opportunistic investors to create that support when they're buying low. In today's video, we're gonna take a look and predict the trends for the summer of 2021 with regards to the downtown Toronto and at-large Toronto condominium market. Let's get to it. Hi everyone, this is Sam from SaberiSixRealEstate and Remax Realtron Realty Inc. As always, you can find my contact information in the description box with regards to my Gmail, my Instagram. Furthermore, you can also find my office information if you want to get in touch with me with any questions you may have with regards to the Toronto real estate market. And lastly, if you do need any help with buying, selling, or any other matter, I would be happy to assist you and lend a hand. And finally, please subscribe, comment, and review if you happen to enjoy my videos. But that is it. Let's get to the point of today's video, which is, as normally the case on this channel, the Toronto condominium market. And when I say Toronto, I cover the condo market from Richmond Hill to Vaughan. So it's really, truly the GTA condominium market. But in today's video, specifically the downtown Toronto condo market. And the certain projections I have for the summer of 2021 and with regards to the market, which is in a short time span away from now. At the time of recording of this video, it is indeed April 26th. So we're really close to the summer. And I want to just project a bit what I see coming for buyers and sellers. To do this, we're going to go through some basic numbers to make these projections. As I covered in my previous video, which is the weekly condo market update, and expect another episode of that later this week, the number of sales, so purely transactions, or the number of transactions when we compare quarter over quarter, so first quarter of 2021 to comparing to the first quarter of 2020, the number of transactions is up. And this is reflected pretty much in any year over year analysis, even month to month analysis. So comparing this month to the preceding month, it's pretty much up anywhere you look in terms of number of transactions. However, the average price sold is still lower, and also same applies to the median price sold. In terms of percentage, the total number of sales in quarter one of 2021 was around 79% higher than the previous quarter, which when we break it down to numbers, there were 5,226 sales/transactions in quarter one of 2020 compared to this quarter where it stood at 11,000 transactions. So a high increase of transactions. And I've gone through the reasons as to why that's the case for a long time. A lot of pent-up inventory when the worldwide event we went through was at its worst and the condo market kind of bottomed. So there was a pent-up inventory. There was also a lot of sellers looking to sell because of their financial troubles due to the rental market decline, which I will get to. And there was a lot of investor demand jumping in low, being opportunistic to buy when the prices were low. I mean, it's kind of the classic axiom of investing, whether it's in stocks or real estate, where when there is a dip in prices for any good commodity or goods, you will see a baseline kind of formed by opportunistic investors to create that support when they're buying low. And then you had a lot of freehold buyers who are now in more recent months shifting towards the condo market because they're being priced out of the freehold market. And that's its own beast entirely, right? For these combinations of reasons, the number of transactions are much higher, but rents are still down. I covered in my other recent video last week, or maybe the week before that, they are trending upwards. However, year over year, when we look at the numbers, on an annual basis, at large, rents are down 15%. But when we break it down to bedrooms, so based on bedroom numbers, for one bedroom, rents annually are down 16.8%. Two bedrooms are down 13%. And bachelors, they're down 24%. Within that is an interesting, another interesting trend that I've always laid out in my videos dating all the way back to 2020, which is bachelors are the riskiest sorts of investments. Whenever you have a decline in a condominium market with regards to the rental market or with regards to, for instance, as the purchase and sale market as well, what happens is that bachelor units, so the small micro units, and furthermore, older buildings see the brunt of that. Basically, if you have a downward curve, you can really think of it of the bachelor units and the older buildings seeing the brunt. They're on the front line of that. They feel it the most. However, what makes bachelors even more risky is that on the converse of it, so when you have an up curve, when you have an uptrend, when the condominium market is hot, it's not as if it goes the other way around where bachelors see the brunt of that. So they see the positive immediately, they see the negative immediately. No, that's not the case. When the condominium market is hot, yes, bachelors do appreciate, yet nonetheless, they're far outpaced by all the other condo types. Where on the negative side of things, they're not far outpaced by the other condo types on the downside, on the negative curve. They're actually leading the pack in that sense. So this is why bachelors are such risky investments, because as we see here in the rental market example, they saw the biggest drop in rent. However, the larger point here, and this is the point I want to make for the summer of 2021, when we look at the downtown Toronto real estate market in terms of the downtown Toronto condo market and the Toronto condo market at large. But once again, this can be truly applied for Richmond Hill, Vaughan, Markham, Mississauga, Etobicoke, east side of the city, Scarborough. This will honestly apply to all these areas, but it's going to be most pronounced with the downtown, midtown, North York, Toronto condo market, because that's where the most inventory truly is. What's going to happen, in my frank opinion, in the summer of 2021 is two things. Given the new stress tests, the new mortgage stress test, which I also covered in that other video, you can go watch that for my coverage of that. Given the date of implementation, such as June 1st, that new stress test applying to individuals who are going to put more than 20% down, that stress test is going to price out a lot of condominium buyers, a lot of buyers in general, right? This is going to have its own effects into the freehold market. But since we're looking at the condo market in this video, it's going to price out a lot of condo buyers, right? And for that reason, we're going to see a frenzy, as we have been seeing in the number of transactions from the date of announcement to the date of implementation of that new increased stress test. And what's going to happen is, after that increased stress test date, June 1st, right? What's going to happen is we're going to see a little bit of a small pause on the market in terms of condominiums. So it's going to become a bit more of a fair and balanced market. Inventory will dip, and so will buyer demand. But they will, in my projections, dip in unison. So it's not to say that prices are going to drop June 1st, it's going to become a buyer's market again. No, for a short period of time, I think after June 1st, once a lot of those buyers who could not get something before June 1st, mostly investors, but a lot of end users as well, what's going to happen is those buyers will be removed from the condominium purchase and sale market. Once again, this only applies to those who are going to put more than 20% down. The other individuals are going to remain, and some obviously people who are going to put more than 20% down, they're going to remain as well, because they can actually take on the new mortgage stress test. But since there's going to be a portion of buyers removed from the market, some of those may actually go towards the rental market. Think about it like this, right? If the same thing happens with detached properties, most likely, let's say 8 times out of 10, 7 times out of 10, buyers are priced out of the detached market, they move towards semi-detached. Semi-detached, they move to townhomes. And maybe the order of operations in succession is not in that order. Maybe in certain cases, they go from detached to immediately to townhome, they skip the semi-detached. Point being, according to basic microeconomics, when you're priced out of one market, one commodity, you move towards the most relatable good. And exactly in microeconomics textbook, this classic example of when the market for red meat, for instance, becomes too expensive for buyers, right? Some buyers shift towards chicken, right? And so on and so forth with fish, right? We account for the price elasticity of certain commodities or lack thereof. We see that buyers have a sense of shifting towards the most related and relative good. Applying the same logic, once again, we see from semi-detached to townhome, and from townhomes there on in is condominiums, and obviously there's condominium townhomes as well. Point being though, after condominiums, if buyers are priced out of that as well, and partially due to this mortgage stress test, they might also shift to the rental market and start renting again. This in conjunction for the second reason, which is harder to project, but if we want to be optimistic, we have to do so, is when things open up more and the worldwide event, I'm sorry I have to speak in code with regards to this because YouTube can be a little bit pain in the butt, but this worldwide event that I'm referring to ceases, especially in Ontario and Toronto not ceases fully, but it calms down a bit more, and there's more immigration, there's more newcomers coming here, there's more working professionals coming in. These two events in conjunction with one another will create a case where the rental market, in my frank opinion, will see staunch improvements. And once the rental market improves, you're gonna see more investors get interested in condominiums, more investors who maybe missed the bottom out, right? Maybe they missed the buying at low prices, moved themselves from the market, but now they're seeing the rental market growth and they're now interested again, and they run back into the condominium market. And current holders of property who also see the rental market growth and can account for that in pricing of new listings, right? There's a lot of ways this can go about it. Now, a more complex issue is, will this increase in the rental market that I'm projecting kind of counteract the lull we'll see after June 1st due to this new mortgage stress test? And that lull, I think, will be a lull in the short run. However, this increase in growth in the rental market, I do not see it being in the short run. Anyways, that is Sam from SaberiSixRealEstate, RE/MAX, Realtron, Realty. As always, you can find my contact information in the description box. Feel free to get in touch with me with any questions you may have with regards to Toronto real estate market, or the Toronto condo market, or GTA condo market, whatever it may be, GTA real estate market. Lastly, if you happen to enjoy this video, feel free to subscribe, comment, rate, and review. And thank you so much for watching.